managing partner at Superscrypt. That's an early stage crypto native VC fund based here in Singapore. July 2022, we were formed by Temasek. You can think of them as a single LP or investor. It's over a $300 billion portfolio of investments globally in some of the largest companies in the world. Almost half of the deal flow that is coming out of the US, and then maybe about 30% coming out of Asia, because it's a very, very exciting geography. And then the rest is kind of Europe and rest of the world. In the West, there tends to be a stronger focus on product, on narrative, because ultimately a story is what sells. In Asia, you also have a lot of great crypto infrastructure. Some of the biggest exchanges, Binance, OKX, they're all based in Asia. A lot of strong market making teams that provide liquidity to these tokens, they're also based in Asia. So you kind of need to be good at both.
The way that Asian founders look at marketing versus the way American founders look at marketing is also so different. But I do think that you need to merge that East-West with marketing as well, just because in the East it's a lot more KOL driven, it's more hype driven, but you need that as well. You can't completely discount that.
It's good that you bring that up, actually, because I remember speaking to a couple of founders in the West and they were like, what on earth is KOL, right? Concept that's very Asian in its inception, I suppose.
I actually started my career in venture capital before getting into crypto. It was a very traditional Web2 fund, and I remember the partner that always tell me that look for grit in founders, and I was like, how do I measure grit?
Hundreds and thousands of deals come across your desk every week, and the best ones typically are going to be the ones where you have the time to assess the founder over time. I actually want to ask you a question, right? Because you started out in traditional venture. What was some of the stuff that they looked at when it came to traditional metrics?
Product market fit already at that stage, which I know in crypto is not something that people look at. But even in like the pre-seed seed stage, we needed some form of validation that there is product market fit, whether they have letter of intents from some clients that they've closed.
In prior cycles, having product market fit was maybe not always the top of mind, because for a lot of folks, the token was the product. I still very much believe in tokens, but what I do like seeing is that there's more emphasis on fundamentals. We've just freshly raised our second fund, so we are well capitalized to deploy, and then we've got a couple of strategic investors, 2 institutionals on the cap table, which we can open up their ecosystems to help portfolio companies and hopefully win allocation to some really good and exciting deals. Thanks for having me, Tanya. Very excited to be here. So I'm Jacob Koh. I'm the managing partner at Superscrypt. That's an early stage crypto native VC fund based here in Singapore, with some members in the US and the UK as well. In terms of my background, we've been around for a while, since mid 2022, investing into early stage founders, projects, protocols, equity tokens, the like, seed, Series A. And before that, I spent 9 years investing at Temasek, which is the Singapore investment management company. And before that, had a life in TradFi, as most people do that enter this industry. Some banking, a couple of years in management consulting. It was really interesting because before I got into crypto, I actually never really did anything in crypto. And it really was COVID that got me interested in coming across and exploring and trying a few of these protocols out. So during COVID, when we were locked up at home, that was when I started moving some capital on chain, started experimenting with DeFi pools, had absolutely no idea what I was doing, made some money, lost some money, as most people do. And that was really where the passion for this started, just doing something on the side for fun. I started writing anonymously as well on Twitter, covering some of my experiences, especially around the Solana ecosystem, because that was still very nascent. Ethereum, at that stage was $100 a transaction. So it was a little harder to do DeFi there. It was a little harder to talk about NFTs there, but Solana was very exciting because, NFTs were just taking off then. So that was my first foray into crypto and digital assets, and just fell in love with it. And the next thing had the opportunity to start up the fund with Temasek helping form us, and that's about me.
Amazing. And so Superscript and Temasek, how are they exactly linked?
Yeah, so back in July 2022, we were formed by Temasek. You can think of them as a single LP or investor, and we had some capital from them, and then we deployed it into early stage founders. Now, the great thing is that we have support from them when it comes to delivering value to our portfolio companies. It's over a $300 billion portfolio of investments globally in some of the largest companies in the world, but also some of the more cutting edge fintech and textile companies and companies in the financial industry as well, which dovetails very nicely with crypto, right? Given how early crypto is, it's nascent, it's disrupting these industries. But portfolio companies still need a leg in when they want to connect with the banks of the world or some of the fintechs that may or may not use crypto rails. So that was the thesis behind how sort of we were set up. And then as of end of last year, we raised a second fund successfully with external investors, and Temasek is an anchor and continuing to support, provide strategic help.
Congratulations, that's amazing. And so with the second fund, has the thesis evolved at all, or is it still very much the same vision as you had with the first one?
I think with crypto, it's so early that everything is very narrative driven, right?
Mhm.
And it would be very unwise to necessarily corner yourself around a particular narrative because they change so quickly. Every 6 months, there is a new hot topic. In the last cycle, DeFi was hot. And then NFTs became very hot, and then they cooled off. And then in the ensuing carnage of the bear market, things like zero knowledge technology, FHE, started fully homomorphic encryption started becoming more important. And so, narratives always shift, but what really underpins the thesis across Fund 1 or Fund 2 or even our belief is the belief in blockchains and digital asset infrastructure that really drives an opening up of money, of value, of coordination, of incentivizing people to do things, right? Digital ledgers sounds very unsexy, but they actually have a lot of powerful qualities that can enable all of these things. So I would say all of that is the common point that anchors across both funds. Anything that touches a blockchain, anything that uses it well to facilitate payments, to incentivize coordination globally. That is what we still continue to focus on. In terms of subsectors, they've always changed over time. Right now, we're seeing a lot of interest and a lot of activity in the payments and stablecoin space, given all the favorable regulation and support in the US and globally. We are also seeing AI take off as an industry in general, and where there is overlap between crypto and AI, we're also seeing a few projects built in that space. So ultimately, anything that touches the blockchain, anything that uses these fundamental principles to build great products and reach and create really strong communities and ecosystems, that's what is the through line that continues through what we do over the last 4 years.
No, super interesting. And of course, you guys are based in Singapore. Temasek is Singapore's sovereign wealth fund. But do you invest globally, or what is that like in terms of geographies?
Mhm. Yeah, so I think that the definition of Temasek is a government investment management company, and not necessarily a sovereign wealth fund, because I don't think they manage asset reserves. But I think for us, we are a global investor. If you think about um, Web3, it really is another development or phase of development of the internet in our view. So if you think about how the internet freed many things. Initially it freed information. You didn't need to go and look up an encyclopedia, a physical encyclopedia anymore. You could go on the web and you could search what people had put online. Then it freed content. The first things people started doing was sharing MP3 files and audio files on Napster, and then movie files and that sort of thing. But sharing value, sharing money has always been something that has been a bit slower to practically achieve. Of course, you have payment companies, e-commerce sites, etc. But being able to get cross-border flows using blockchain tech hadn't really, been developed over time. And I think that really is the promise of what blockchain tech is. And so, for us to be effective as investors, I think we have to invest globally and we have to look globally. I'd say almost half of the deal flow that we look at is coming out of the US, and then maybe about 30% coming out of Asia because it's a very, very exciting geography, and then the rest is kind of rest of world.
Do you see any difference in the deals that come out of the US versus Asia? Like any kind of typical characteristics as well as founders?
Yeah, this is a good question. I always get this question because I have the sort of luck to be thrown into some investor panels from time to time. I think let's talk about the West, right? I mentioned that half of our investments tend to come from the US side. I would say that in the West, there tends to be a stronger focus on product, on narrative as well, because ultimately a story is what sells. A story is what's going to sell you to someone that's looking to deploy capital. A story is going to sell your product to your customer, right? And I think in the West, there's a lot of emphasis on that. That's not to say it doesn't come with substance, but it's something that can sometimes inspire, and there's a strong emphasis on that as well. I'd also say that there's a lot of great schools and bodies of talent in the US and generally quite entrepreneurial in nature. So you tend to see a lot more of these projects come out, right? And they will come out with a valuation premium as well because of the pedigree of some of these founders and their ability to communicate their story. I'd say overall they're more willing to take bold category defining bets and push a story behind that. Um, how does that compare with Asia? Well, I'd say that in Asia, founders probably seem slightly more pragmatic, practical. They're probably a little less ideological. Narrative is still important, but ultimately, at the end of the day, very, very focused on product, user experience, customer actually delivering sort of monetization, which I don't think we've always seen from Web3 projects in general. Think in the West also, and I don't mean this in any offensive way, but they are more willing to actually see what's working with competitors and either copy that function and build it into their product so that they can compete with you, right? And I think that that is something that belies nimbleness as well as practicality. The last thing I'll say, and it's related to that last point, is that when I talk about ideology, a big part of Web3 and crypto ideology is decentralization and ensuring that no one party or no blocks of large parties control a large part of the network and can dictate transactions and votes and governance and the like. But decentralization also comes with drawbacks, right? Things take a lot longer to pass through. There's a lot more politics involved, and sometimes you're just not as nimble to develop a good product. You'll also sometimes see a product that is a little more clunky to use because it's not centrally developed. And so I think in Asia, you probably have some level of comfort with centralization. Users are much more focused on the customer experience and what they can do. And you've seen that in some of the products that have broken out, like Jupiter, which is the DEX aggregator on Solana. They are very focused on user experience. You go to jupe.ag, you swap for tokens on Solana, and you basically get a result just like that. But from what I understand, a lot of what they're building in terms of their code is not as open sourced as some of the protocols that you see that might be coming out of the West or Europe, right? So I think those are the stark differences. That said, all of it's investable to us. It's different horses for different courses, and ultimately still able to find venture-style returns across all of these geographies. The benefit for us is that given we have a lot of strategic backing out of Asia, we are able to deliver the ecosystem, the relationships, some of the connections to the enterprises, banks, fintechs, to a lot of the overseas projects that want to tap into this market. And equally, because of that network, which is global, we're able to take some of the Asian projects that we invest in and bring them across to the US to access a customer base as well as other relationships.
Yeah, it's a true like East meets West, which I think is super important because I do think, those are the two kind of big geographies or the big hubs for crypto.
Yeah, for sure. I mean, as I said before, the West, they love big category defining bets, a lot of very research driven type projects. But in Asia, you also have a lot of great crypto infrastructure. Some of the biggest exchanges, Binance, OKX, they're all based in Asia. A lot of strong market making teams that provide liquidity to these tokens, they're also based in Asia. So you kind of need to be good at both, and you kind of need to combine both to be successful, in my view. And that's the thesis behind how operators are fun.
But definitely, I think even in terms of marketing, just because I've done marketing for a couple of different projects, but I think the way that Asian founders look at marketing versus the way American founders look at marketing is also so different. But I do think that you need to merge that East West with marketing as well, just because I think in the East it's more, it's a lot more KOL driven, it's more hype driven. But you need that as well. You can't really discount that.
It's good that you bring that up, actually, because I remember speaking to a couple of founders in the West, and they were like, "What on earth is KOL?" Right? Like, it's a concept that's very Asian in its inception, I suppose. Um, I think you always need promoters for any project in crypto. Anything that launches a token, you'll always need supporters. You will need a belief system. You'll need a religion, if you will, right? Chainlink had it with the Link Marines. There's probably a few, 10 other different ones, and nothing's coming to my mind right now. But that religion really provides a strong foundation for you to build products, for you to use your token treasury to go and acquire things, or build more relationships and provide incentives for people to use your token. So I think that marketing is very important to drive this. It's slightly different across Asia and the West, but it's actually also very similar, right? Because you need that belief system. I think some of the best to have done this, some of the large L1s from 2 or 3 cycles ago, like Ripple, Cardano, where they really had a lot of, I would say, results early on, and they built a strong community around them globally, and that's what's helped them persist over time through bear cycles to be able to continue to run their foundations and try and entice projects in the ecosystem.
Yeah, that's the thing, right? I think people a lot of times also overemphasize on the product, but also given how quickly AI is growing, I think tech advantages don't really last long. So it is
Yeah,
really about getting people to believe in who you are, getting people to believe in the project, making sure, that's the real moat, as
yeah,
people
I think
say.
founders, I mean, with the advent of LLMs, Claude, co-work projects, I think it's becoming very clear to people that code is fast becoming a commodity now. And so the moat has got to be around other things, right? Whether it's a community or ecosystem where people will come and show up. And that's harder to maintain over time, but that's a different kind of skill. It could also be, let's say, where you have some benefit in terms of regulatory licenses, especially when we start thinking about RWAs and payment on ramps and off ramps. But yeah, code is becoming commoditized. So either you have really good marketing that helps you build a very sticky community, or you have some of these other moats that can really give you a foothold advantage versus others.
Definitely. So now, in this year, when you're evaluating deals, what are some things that you're looking at? Is it more centered around the founder, or is it, some things that you look at when evaluating deals?
Yeah, I think this is a question that all VC will probably tell you very similar sort of responses and answers to, but it's always the founder, right? The founder and the founding team, do they have the grit? Do they have the integrity? Do they have the experience? And where they don't, are they good at hiring the gaps to fill the gaps that they don't have? And then lastly, just can they survive? Because venture is a roller coaster. You probably experience several near-death events, and then it just keeps getting delayed if you are able to deliver a product or raise capital. But it's always shifting, and you've always got to pivot. So I think all of that stays the same, whether it's Web 2 or Web 3, whether it's anything. All of this is what we look for in founders. I think the other things that we look for obviously will be the vision, the idea, what problem are you solving? Obviously, this problem's got to be, a real pain, and it's got to be large enough that there's a market that can actually come on board in scale and help us get to venture returns, right? 10. 20, 100x. Because if we
Hmm.
don't do that, then we're not going to return the fund off an investment. So generally, these are the approaches to venture. You're always investing, targeting the power law, and you need founders to actually deliver that.
Hmm. No, absolutely. So I actually started my career in venture capital before getting into crypto. It was a very traditional to fund. And I remember the partner that tell me that look for grit in founders. And I was like, how do I measure grit? It's like impossible. How do you test for grit? So it's funny that you brought that up as well. But how do you personally like check for something like grit? Because it's obviously so almost like quality, like you can't measure it.
Yeah, so this is the thing about venture, right? Like, hundreds and thousands of deals come across your desk every week, and the best ones typically are going to be the ones where you have the time to assess the founder over time. Sometimes you might say no, uh, and you're able to watch how they develop over the course of several months. And that's how you can sort of litmus test how they respond to challenges in the industry, right? Whether it's an exchange failing, whether it's a law coming out that handicaps your operation, whether it's Twitter shutting down certain API access or whatever, how does the founder respond? And you can only measure that through observation, um, and also constant communication with your founders, right? We try and do that. We try and keep in touch with them every month. We see how we can be helpful. And through those conversations, you can actually paint a picture. If we haven't invested yet, it's slightly harder to do that. But of course, we still keep in touch. We still try and be helpful. We connect them to other folks, and then we see how other folks assess them as well. And through that, you get a sense of like the determination, how hard they push. If they're asking you for a lot of things, that's usually a good sign, because it means that they're not afraid to hustle. Whether or not you can get them a result is another question, but that's how you measure grit. But I actually want to ask you a question, right? Because you started out in traditional venture. What was some of the stuff that they looked at, right, when it came to traditional metrics for venture? Because I think there's an interesting conversation around that and where it's headed these days.
Yeah, I think there were three or four things that we used to look at, and this was a pre-seed seed fund. So the biggest thing was of course. The overall question to answer was why is this person the best person to solve this particular problem? So either, they've spent so many years working in, say, a corporate and found this problem to be so big that they can't help but not solve it, but they have a lot of domain experience around it. But if they're a first time founder, then it obviously becomes harder to see why they're the best person to solve this problem. But then we try to assess, other things like does this person really have that entrepreneurial gene? The first things that we looked at, who the founder, what their background is, why they're the best person to solve this. Then the market, is it big enough? Is it, venture investable? And then the third thing was also what we did expect them to have product market fit already at that stage, which I know in crypto is not something that people look at. But even in like the pre-seed seed stage, we needed some form of validation that there is product market fit, whether, they have letter of intents from some clients that they've closed or, some kind of customers. So I think that was one thing that we also looked at. And then I think other than that, just like small things like, just regular due diligence type of things.
Yeah, of those three things, the first two don't change, right? Like whether it's Web 2 or 3 or where we're headed, right? It's always about founder, and their ability to actually have grit and that entrepreneurial sense. But I think the third thing is something that is being emphasized a lot more these days in crypto. Like you said, in prior cycles, having product market fit was maybe not always the top of mind, because for a lot of folks, the token was the product. As soon as they launch a token, you get a liquidity event and off you go, right? And ideally, that's a 5, 10, 20x. But as we've seen in the last cycle, tokens haven't been able to produce those numbers. I think for a number of reasons, partly because of the risk-off environment that we found ourselves in the last year or so. Secondly, I think a lot of the capital that's interested in digital assets and crypto found its way to because that became more institutionalized. And then the more speculative capital found its way into AI via equity or other type of investments, right? Suddenly they were giving the type of returns that altcoins used to provide. And so what we've seen is a lot less interest in tokens and a lot more interest in that, does this project, does this protocol have some evidence of product market fit, whether it's users, metrics, TVL, even revenue, and I think that's a healthy thing to see in this industry. I still very much believe in tokens, but what I do like seeing is that there's more emphasis on fundamentals, equity, and whether or not there are at least market fit these days.
Yeah, no, it's very fascinating because I feel like it's the same, like the early days of tech when the mindset was very much around growth costs and no one cared about revenue. So for a long time, these big Web2 companies didn't generate any form of revenue. And then suddenly, I remember after the WeWork IPO failed, everyone was like, "Oh, what's the path to profitability? Where's the revenue coming from?" So I feel like we're very much in that kind of era in crypto after last year, after all the tokens failed, where people are like, "What's the actual product market fit there?"
I think some of the reason why we see this as well, like we can't just solely blame, let's say, some greedy founders that just want to launch something and get a token price jump, and then I guess rug pull is the industry term. I also around regulations, right, being very unclear for the longest time. For the longest time, the SEC could come after you if your token did more than utility. So the token had some promise of future financial benefit or expectation in its buyer, then it would be a security. It should therefore be regulated by the SEC, and then the SEC could come after you, right? And so by design, a lot of projects and protocols design their token not to have any of that value. So any of the protocol revenues wouldn't actually stream back to token holders in dividends. You didn't have shareholder or security rights or equity rights if you held a token. So that was done as a defensive mechanism, but it also then kind of created this sub-industry where people would just launch tokens and expect it to pump. And you know what? You have no rights, but the value kind of all goes that way. I think the next change we will maybe see is if we get a bit more around the Clarity Act out of the US. So those regulations will determine what token is a utility token and what's a security token, and what disclosures are required across the both. And then, if you issue a securities token, what can you actually do as well? I don't necessarily think that we should expect anything too game changing. Like, I don't think suddenly security tokens will allow you to do all sorts of fun things and necessarily stream sort of your profits and revenue back without the set of prerequisite disclosures that you need to have. But I do think just having that level of clarity might make tokens more investable and more definable in different kinds of classes, right? Your utility, maybe your security, maybe there's something that's in between. That I think will help balance the ship a bit, because right now it's very equity only versus tokens. But that remains to be seen. The legislation could be passed this year. It could take a lot more time. That's a little bit more of an unknown. But that I think is a potential catalyst, or at least a development in the industry, keep a close eye on.
hmm Yeah, no, 100%. I think, once there's more clarity around clarity, it would be interesting to see how the industry evolves, I think. Like the biggest, with all the regulation changes that have happened and the administration change also, I think the biggest change that I see is, I think the last cycle was very much born out of Asia. But now, a lot of the crypto, like I think New York has become the biggest crypto hub now because of all these regulation changes, administration changes. So yeah, it would also be interesting to see how the industry evolves. And
Yeah, Yeah, I think it helps having an administration that is somewhat more favorable and open to digital assets and crypto. I also think it's now getting bipartisan support. The Democrats were staunchly against it previously, but I think they've been a little bit more relaxed on this front, and that's a good thing from a technological development perspective, at least for the US, right? Like the moment you open up, you can see people flocking and back to New York. Asia will still remain very important. You've got huge markets here, right? China is huge. Obviously there are regulations around crypto use there, but there are many users that and investors that operate in that country. Korea famously has some of the deepest penetration when it comes to internet usage as well as crypto ownership, and some of the strongest belief systems, right? And ecosystems and communities. Singapore and Hong Kong maintain their position as really great hubs for innovation, really great hubs for crypto companies to set themselves up, and also flag bearers for regulation. The MAS in Singapore was one of the first that came up with a stablecoin framework. Hong Kong implemented it about a year after that. And they form the basis for a lot of what we see as the foundation of stablecoin frameworks. So for sure, it's kind of pushed back to the US a lot more now, but I still think quite global.
Yeah, no, 100%. And then for companies who, that you invest in or for projects that you invest in, what are the best type of projects you see that would actually benefit from this East meets West kind of positioning that you have, that would be able to take the most out of what you guys have to add?
Yeah, that's a good question. I think first of all, you look at the respective strengths of both markets, right? As I mentioned before, Asia tends to have a lot of deep capital in the region. It has great crypto infrastructure with respect to exchanges, as well as market makers basing themselves here. So, and then on top of that, I think you mentioned the whole KOL and marketing angle, right? There's a certain level of virality that sits behind the Asian psyche and community. And then the last thing I said was just having huge pools of capital and believers and users of the product, whether it's in Korea or Singapore or Hong Kong or other parts of Asia, right? So if you're a project, let's say in the US, that wants to tap into this, right? They want to build relationships with exchanges, they want to talk to market makers, they want to access markets in Korea, they want to have let's say, a second headquarter or a base of operations in Singapore or Hong Kong, then I think that it's very attractive to work with a partner that can help open up the doors on that front. I'd also say that, some of the regulations in certain parts of Asia are also quite supportive. So there is an ability for that to sort of translate across with some of those teams. On the flip side, on the other way, I think that a lot of Asian projects, they have really good founders, they have really good products, but sometimes the story might not be as clear or coherently communicated. They might also want to access some of the other pools of capital in the US because there are some really great venture capital funds there that are great for signaling. And there are many folks on that side that we have relationships with. Some of them, other Asian institutional LPs that we are close to as well, and we can work those relationships. Say, hey, you guys should take a look at some of this deal flow because we sit in Asia, we know Asia very well. This is a very exciting Asian project that we've sort of screened, and we are also putting our capital in. Would you like to take a look? Right, and then that can open up the U.S. pool of capital, and then that can help them start developing their story, their outreach, in that market. So that's what's been helpful for us across both kinds of projects. I'll give you one concrete example. There was a RWA project that was looking to access pools of capital in Asia. They were also looking to onboard more high quality assets, whether it's T-bills, money market funds, whether it's some different kind of strategy that they can offer to their community. And that's something that we could plug into via the Temasek ecosystem, right? To explore experiments, proof of concepts, say, hey, you've got this bunch of products. Have you thought about tokenizing them? Right, and then in a regulatorily compliant way, offering them on a blockchain, right? KYC, AML, all that jazz, and that was a channel that would open up for that particular.
Wow, that's amazing. And so right now, with given how the market is, and there's a lot of discourse on Twitter as well about this, are you still investing, or what's that like, or has it slowed down because of the bear market?
I think I know what you're referring to. I think it was Tom Dunleavy's tweet which went
Yeah.
viral, and then he had a follow-up tweet where he was like, "Hey, I have like a hundred
Yeah.
leads from this, which is great. I need to be more active on Twitter like Tom. He's inspired me now. Um, we're very active, right? I
Okay.
think right now is particularly exciting for us. Uh, why? Well, you can call it a bear market. Bear markets are the best to invest in. Less noise, more signal. The ones that are left are the builders that are serious about building products with product market fit. And typically, your best results are the ones where you find them now. Valuations also normalize for two reasons. One, it's a bear market, so risk off and capital is scarce. Two, I think with what we discussed about crypto moving a little bit away from token, at least for now, and equity being a bit more at the forefront of focus, that means you've got fundamentals to compare the equity to, right? Whether it's signs of product market fit, whether it's some users, whether it's what revenue you generate, equity valuations and valuations across the board have come down. So that makes it a very exciting time for us to invest. And then lastly, we've just freshly raised our second fund, so we are well capitalized to deploy. And then we've got a couple of strategic investors, two institutionals on the cap table, which we can open up their ecosystems to help portfolio companies and hopefully win allocation to some really good and exciting deals. So yes, very active. I haven't responded to Tom's tweet. Maybe I should, but I also kind of just wanted to keep it low key for a while now until we really hit the road.
No, so for people who might be listening, just know that Superscript is actively investing, and VC funds haven't shut down in crypto. Uh,
They haven't. I think it's a really interesting topic because obviously some have shut down, and that's the nature of the business, right? Everyone has to deliver returns and be able to raise capital. I mean, the same thing will apply to us. If we don't do well, then we'll go the way of the dinosaur. But a lot of the other funds I've heard, some of them are focusing more on equity. Some are focusing more on pushing towards a fintech angle. So rather than just being a crypto thing, they want to invest into financial technology with blockchains at the core, but they will look at it from a fintech perspective, right? Which means fundamentals, metrics, and not valuations. Some have completely given up on tokens, from what I've heard, and moved themselves over to New York because that is the center of fintech and very close to financial institutions. But for us, we're still open to investing in both equities and tokens. I still have a very strong belief in tokens, by the way. I think there's very few things that can give you that rallying cry and coordinate people. But it's if you're going to launch a token, it's got to have a decent product, whatever that is. But then it also needs a very, very strong community and ecosystem that can build around it. Because ultimately, tokens is about an ecosystem. It's about a belief system, a foundation. It's hard to value, which is why it tends to spike in price from time to time and trades at a premium. And then also why it reflexively comes down when there's a risk-off environment. But they still are a very valid form of fundraising, a very valid form of coordinating people, incentivizing people. It's just that, for now, I think a lot of the speculative heat has come out of them, which is a good thing because hopefully it means that the tokens of the future that do get released have fundamentals behind them and have really good support base.
I agree. I think the I recently worked on a token as well, which is Kite, and I think we have a strong community, very strong. Yeah, there is also a use case, and because of that, I see that the token is actually holding up despite however the market is. And also all last year, like in November, is when we TG'd, and that's when a lot of projects TG'd, and yeah, a lot of them fail, but a lot of them are still holding up. It's just that if you do have that strong community, if you actually have a real product and people can see through that, your token will survive and actually give you multiples in that.
Yeah, I
Uh,
mean, Kite is great, right? That's another example of a resilient builder that's pivoted a few times. I believe, right? Kite were not building agentic AI or crypto at the
yeah.
time, but they were building something on the infrastructure and data side, and they made the pivot to where they are, and they're very successful today, right? I think everything you said is correct. There are, of course, other forces as to why token prices might come down, but the fact that it's held in such a risk-off environment is actually a really great sign. Hopefully, it means that the community is backing it, right? But of course, the other aspects are things like market makers and some of the liquidity provision and venues in the background, and those are also important to, a project needs to manage that really carefully, because even if you're a great project, you got a great community, if you've mismanaged how you work with market makers, then that can also tank your token, and once it's gone, it's kind of gone, right? So many factors, but I think Kite's a good example. I mean, you could also say Monad, which disclaimer we invested in. After they launched, they kind of came down a little bit with the bear market, but I think they've consistently been sort of coming back because they've been quite deep at building community over the last few years, right? And that belief system is there. Obviously people take pot shots on Twitter, and that's fine and fair, and that's fair game. But it seems to be sustaining for now, and hopefully, as we see more protocols and uh, products with market fit launch on the chain, you'll start to see that base form. And the last one to talk about, of course, is Hyperliquid, right? They just have a fanatic community. Great builders, fantastic product, and that continues to perform. So it is possible for tokens to continue to do well. You just have to have all these elements: great product, great community, solid foundation.
No, for sure. And my last question is, what are some things that you're excited for in 2026?
Yeah, I think that 2026, as I mentioned before, it feels like a little bit like a bear market for a lot of people in crypto specifically. A lot of attention is out the door. People are focused on AI. There's a war, there's risk off, etc. But what that means is that there's a lot less noise, right? We were at East Denver, and it had like half the attendance of what we've seen in the last few years, but it just felt so exciting because the founders that you met were the ones that wanted to be there. They, you could have high quality conversations for a long period of time without there being distractions, right? So, what I'm excited for in 2026 really is it's a great time to be hunting for good projects, real builders that are building for product market fit. From a use case perspective and utility, what excites me is the fact that crypto is finally being used in real systems. So it's been integrated into payment systems. You've seen this via various acquisitions. Stripe acquired a bridge. MasterCard recently acquired BVNK. Stablecoins and crypto rails are now really being accepted as a form of financial infrastructure, and they're going to start to make their way into banks. You're going to start to see people tokenizing real world assets and putting them on chain. So you're going to hopefully see a lot more access to different types of investment products that people otherwise wouldn't have been able to access. Or if you had to access them, you'd have to go via a private bank. That's gated. You need certain levels of wealth, or they charge you fees, right? Why is this even necessary, right? So to me, it's all about the democratization and access of money, of value, of investment products, and that's what gets me excited because we finally don't we finally can say, hey, there is an actual use case for some of this stuff. It's not just like meme coins and speculation. All of that's still pretty important. Don't get me wrong. In a new tech, all of that's a lot of fun. But we just can't, we don't we're not in a place where people are just poo-pooing things like NFTs and pump.fun coins. There is real use of this.
Yeah, 100%. I mean, I was talking to my parents recently and they were so excited about it because, so they live in India, and in India you can't trade USDs. But if something like, US equities come on chain, then it's so easy for them to kind of trade US equities. Or I think in a lot of different parts of the world, there's like all these constraints. So I think even things like that actually create reels for people. So,
Yeah, I'm a big believer in freedom and access, right? I mean that I grew up in the age of the internet. I do remember, I'm probably placing my age here, but I do remember a time before the internet, and life was certainly slower, but it was a lot less fun. And when the internet came, it was like just a step change. Like it was a whole new world, and suddenly I was exposed to so many things, like information, content-wise. And to be able to do that for money, for
mhm.
value, for cross-border transactions, for potential financial products, to create financial freedom, to have access to currencies where they might not be debased by inflation or country issues. That's freedom, right, to me. And that's why it kind of feels great that we're starting to see some of these inroads in the infrastructure being placed to traditional companies, because it's an opening up of this vision.
Yeah, absolutely. So very exciting times, I think 2026, 2027. And I'm overall super excited to see, where this industry kind of goes to. Yeah, those are all the questions that I had. Thank you so much for the podcast today.
No worries, really appreciate it, and honored to join you, Tanya. Thanks for the opportunity.
Thank you for listening to Off the Record. If you like this episode, like, subscribe, and leave a review. It helps the podcast grow. You can find more episodes wherever you get your podcasts. See you next time.